China is not our problem, though Hong Kong is not helping. Our problem is with the Fed, raising too much and too fast, now too slow to cut. Spread is way too much as other countries say thank you, in all caps, to clueless Jay Powell and the Federal Reserve. Germany and many others are playing the game crazy inverted yield curve. We should easily be reaping big rewards and gains, but the Fed is holding us back. We will win.
Today, ladies and gentlemen, my account currently sits at $110,795 for the dividend portfolio, dripping a little more than usual because the Canadian dollars are down. But I want to explain to you why the markets are down. Is this a good or bad thing? There's a lot going on that's interesting, so we'll jump right into it. Welcome back, my passive income investors. Today is a very special and important day because, oh my goodness, I was not planning on the record drop that we're having right now because Trump is trying to blame Jay Powell there, the Federal Chair of Reserve, for basically not lowering interest rates fast enough. But the problem is the market is so confused right now, guys. And we're going to head over to my personal trading accounts. I'm going to show you my live holdings so you guys can judge and kind of compare them to yourselves as well. But because of basically the market sees things a little backwards. So before we head over to the computer, I'll just write this down really quick. So essentially the market doesn't like uncertainty, volatility, and low interest rates. The point is over time with a normal debt cycle, like people understand the markets are supposed to work, interest rates are supposed to go up. Trump wants them to come down, and they're coming down in Canada. They're coming down everywhere because people are really afraid of a recession. But Jay Powell is trying to sit there and judge whether, is there enough jobs? Jobs reports are good. People are paying their debts. So he's trying to play this game right now and trying to cut the noise out. But it doesn't help when you have a president jamming his fist down his throat by the definition of. So it's led my accounts down today. I'm sure it's led your accounts down. What do you think about this? Before we head over to my accounts, let me know in the description below. Do you want lower interest rates? Do you believe what Jay Powell is doing is proper? If you don't know Jay Powell, do you think what Trump is doing is right? Besides, to basically mitigate some of these fears right now, he's pushing the tariffs into December to not screw Christmas up and cause the markets to go lower. But it doesn't seem to matter what happens today. The volatility continues, which might be good for swing trading. But I'm a dividend investor. Divide that out by 4. I'm going to have to do that on the computer, and I'll tell you exactly how much I'm making a month. But this is a nice, healthy increase because the Canadian dollar has dropped a little bit. And every time the Canadian dollar drops, my U.S. holdings go up. But in the same kind of reverse idea, I guess the Canadian value of my dollars goes down on the Canadian end. It's a mixed bag of balanced portfolio-ness. Come check it out, guys. First off, I got to shout out thanks to all you new Dividend subscribers, and welcome to the community, guys. And just as a big thank you back, I always promised to subscribe in return to a bunch of you guys for subbing to me. So stay cool, stay awesome. Let's get right into the accounts, guys. And sooner or later, I'm going to update you on the back end of my YouTube channel, how it's doing. But thanks all of you for continuing to help this wonderful community grow. So starting off, guys, we're going to look at the 3 accounts. And I'm just going to quickly break these down because, well, actually, there's a lot of accounts today. So prepare yourself. I'm going to try and rush through this quick because, like I said, everything's in the red. Funniest thing ever, guys, before I get into the accounts is just look at this. Every time I go on to my platform here, StockTwits, and I'm scrolling through, I just think it's wild how much red there is today. Like, just take a look at the insane... Oh, here we go. This is kind of funny. Can bulls climb stairs? Oh, that's friggin' hilarious. Oh, I love that. A lot of good memes today. I want to like that. That's friggin' hilarious. Oh my God. Can I reply to that real quick? How do I, yeah, reply. That's so good. Laugh my A off. Laugh my A off. That's so good. But yeah, this is what happened today when I scrolled in. You see any green here, guys? There's no green in any of the accounts or any of the markets today at all because of the news that we were just talking about. But let's take a look at the own personal portfolio and stop sidetracking here. Utilities remain the best, obviously. They seem to be holding up the best in all of this. But I've done something drastically different to you new subscribers. See if you've noticed it yet. I've turned drips on. Essentially, because I don't mind buying these stocks down at these levels. I'm happy with these companies. I'm just going to put drips on for the short term. And just hopefully at some point when the stock comes back, I will be selling positions off. But I'm pretty happy. Most of my US positions are just about finished, but I put a drip on GEO and Altria Group. I want these to grow a little higher. BTI, I'm not allowed to put a drip on, probably because it's a UK company. I'm not exactly sure how that all ins and outs work, which, by the way, I've got some dividend payments, not on this account, but my other account, which we'll talk about in a sec. But I've turned drips on. I figured I might as well just let my money reinvest, and I'm pretty happy with the layout of this right now. And yeah, I'm just gonna let it do its thing for a few months and just let it ride in
And the dividends, though, the dividends I'm riding in on, you can see have been reinvested. So now we're going to see the difference in charting for reinvested in cash. I do have some payouts for companies that I can't really do much with the dividends, but I figure because I don't need the dividends right now, I'm either going to be spending them on stocks or reinvesting them. But a lot of these companies give you benefits for drips. They actually give you cheaper shares and they're commission free. So it's just not, I might as well just have them on, right? But we can see the total income in the Canadian account is 1968, and in the U.S. account we're getting about $1,583 ish, give or take. Don't count 384, something like that. Anyways, this is in USDs. Converted to Canadian is about $2,111. I just did the math on that. That's how I get my exact dividend numbers. The numbers I give you guys are the exact numbers, by the way. But you can see the payouts and what my percentages are, and I'd probably be getting some better deals in some companies. But I got really good deals on Apple and Microsoft. Like they're both paying out almost the exact same percentage, which is kind of cool. And I own almost the exact same amount of each, which is even cooler. So I got some dividends in here. $141 probably came from BTI. Because I've owned this one since the beginning of the year, so I was qualified for the dividend, which it obviously paid out. Someone was asking me that they paid out maybe less of a dividend. I'm not sure. I'm going to have to check in on that. But in this account, I'm only allowed, Altria Group's the only one that's going to give me a drip, which is a shame, but I don't own enough of J&J, Starbucks, or pretty much anything else in this account that'll allow me to drip, because in this specific Scotia iTrade account, you can't drip fractional shares like you can in M1 Finance. So I'm stuck waiting till the positions get big enough to afford the dividends, which in this account we can see because the new positions I bought like J&J, MMM, actually, did we quote on how low those were right now? Let's see how we're much down we're on these. See, these are starter positions. I'm down like 2%. Like it doesn't even make a difference. Same with MMM. Actually, I'm down most on MMM, but that was, again, expected. It's been in a downtrend and I want to buy more. They will be stocks I'm going to be leveraging into. But we can see with their lower percentage ratings, and I'm buying these as more stable companies for the portfolio, which nothing seems stable today, so it's an odd thing to talk about. But yeah, I'm gonna have to build up these positions way more. These positions will have to become somewhere between $5,000 to $10,000 positions before these dividends can be set up on a drip. But in this account, guys, we can see the combined total with the reinvested here is something like 1,100. Don't quote me on this, around 1,100, $1,200 or something like that. Really healthy dividends coming in off this guy, and then finally my RRSP, which is going to be my emergency / buy a house fund. Because you can draw against your RSP. I'm just buying safe, reliable, what's not supposed to be volatile ETFs. But clearly, with Trump's mouth and what is going on today, we get a lot of volatility. And I'm getting about $60 in dividends out of this guy. But I don't care about this. I'm just leaving this here to defer tax income because it's an RRSP. Actually, I don't explain that too often, I guess. So the first account here, guys, is a tax-free savings account. I pay tax on putting the money in the account, but all my dividends in this account are completely tax-free. So these dividends are all qualified tax-free dividends. It's money I can spend as I please, and it equates to quite a bit, as you can tell with how much is in this account. It equates for a healthy, decent amount of income. And then this account is a managed account, as I call it. I literally call it my managed account because this account I have to pay attention to because this is money that I have to pay tax on. So it's more important for me to manage this and pay attention to it. In fact, I might sell some of them off to put into my RSP just at the end of the year to defer the income. Because this RRSP account is the registered retired savings plan. I can't use the income I make on this account, but I can draw money out of this account for emergencies or to buy a house without getting any tax deductions to an extent, obviously. But they're allowing you to put $30,000 up in this account to put on a down payment for a house. So I'm just going to slowly build it over time. And I just want to, like I said, be in a position where I know I can buy a house. And then when the opportunity arises, I will jump on it and I'll have this money sitting here waiting, hopefully making money, because this could happen anywhere from 1 to 5 years from now. So it's just starting positions, right? And then finally, the brand new account I'm still learning. We have my Royal Bank account that I've currently bought about $1,000 worth of stocks, in which I'm down $38 in because I bought MMM, which is down 4.3% in this account, also paying me about $30 Canadian in dividends. So I'm still learning this account exactly. I wonder if it'll show me intraday. I'm just still learning how all of this works. You're going to have to bear with me until I can break this account down further, and I'm going to do a full breakdown sooner or later on both the accounts. But maybe we'll just take one more quick peek in here and see what is going on inside of the hilarity that is StockTwits. Here, can we play this in real time? Let's go watch list. Is there anything interesting? Any more memes? Maybe we could go check some stuff out. Then what? There's going to be a lot of bears, actually. It'll be funny. Maybe let's go check Bitcoin out, which we all thought was being a safe haven. I thought Bitcoin was the thing people were running to in these down markets, but apparently not the case. Any fun memes in here today? Bring on the power. That's kind of funny. bullish. That's kind of a fun meme. Come on, guys, be more interesting than this. That's funny. There we go. This is the bear or no trade zone. I kind of love this, guys. You can join me on StockTwits if you'd like. I'm not going to bug you any longer. How is this affecting your portfolio? Let me know in the comment section below. I'd love to hear about it. Don't take Trump's words too harshly. I honestly think the markets are pretty good. The balance sheets don't lie. I think the economy is okay. I think people are stretched, but when you're stretched, so long as there's jobs, people paying the bills, I think everything is being over-exaggerated here. So this is, in my eyes, a buying opportunity. I will be purchasing stocks throughout the next month, well, throughout the next year, let's be real. I do have money sitting around right now. I'm just going to keep watching for a few of the positions and just see where it goes from here. I like it cost averaging in, but my starter position's usually around $2,000 just to make it interesting. So stay cool, stay awesome. I look forward to chatting to you real soon.